Welcome everyone, and thank you for joining today's webinar. We're following the topic of steering the carbon conversation, turning sustainability data into action with IBM Invisi. Today, I'll ask a panel how Logicalis and their parent company Datatec are tackling the challenges of ESG reporting, regulatory pressure, and operational complexity, and how IBM Invisi helps them to bring raw sustainability data into their strategy. Please ask your questions throughout in LinkedIn, and we will review them and try and get to them in our time. You can add them as we go, but we'll follow some questions that I've got in my mind, and then we will move to the submitted questions towards the end. We will hear from three speakers. Firstly, from Nick Zinzan. Please introduce yourself, Nick.
Hi everyone, Nick Zinzan. I'm Head of Responsible Business at Logicalis, as well as our parent company Datatec. So I have responsibility across our three pillars of people, communities, governance, as well as our planet.
Perfect. And also from Ross Kirkpatrick, please introduce yourself, Ross.
Hey everyone, good morning. My name's Ross and I head up delivery for Invisi across the UK and EMEA.
Great. And also Tim Wadey, please introduce yourself, Tim.
Yeah, Tim Wadey. I run the advisory team here in Logicalis, and I end up having lots of discussions with our clients about this sustainability topic. Thank you.
Excellent. And I will be your host, Georgina McRae from IBM. So introductions over, moving straight into a question. And Nick, I'm going to ask you a couple of questions first. It's been 6 months since a similar webinar on how and where Invisi fits into Logicalis' sustainability strategy. So since then, how's progress? Can you start us off with an update, please?
Absolutely, it's been pretty good. It's really transformed our emissions recording and analysis process. It's provided us for the first time with a single uniform platform for all of our data, which we just didn't have in the past. We can track information so much more easily now. See whether there are any gaps. We can get real-time calculations and results. We have an immediate view on all our operations and emissions sources. Thinking about the tool, the Power BI analysis and reports are very powerful. They allow us to drill down into the data, pinpoint emerging results, which is very difficult to do previously, to be honest. And it really allows us to develop up-to-date and accurate carbon reduction plans, which is one of the most important things, and of course a key plank of our sustainability strategy. And that helps all of our teams around the world, when we feed the data back to them, to make informed decisions and choices about where to invest to get the most impact in terms of reducing emissions. So yeah, it's been a real game changer for us.
And it's great that you mentioned feeding that data back around the world, and that engaging people and having data to do that is so important. So in terms of that, how did Invisi make a difference to your recent end-of-year reporting process?
It's safe to say it was a far easier, smoother and quicker process than working across multiple spreadsheets in previous years. As you can see here, this is what we do, and this is how we get to the report at the end of the day. We pull in a lot of data from all of our operations around the world, consolidate that. It gives us a real-time view, immediate view. We can analyze it in all different ways, and then it facilitates the reporting, whether that's into our annual report, which we've just completed, or into regulatory reports, which we'll come into in the months to come. A key differentiator, I suppose, for us was Invisi's capability to apply accruals or estimates where data might have been missing or delayed, which allows us to have a comprehensive 12-month picture of our emissions pretty much straight away. And the availability within the platform of relevant emissions factors meant there was immediate calculations of those emissions rather than the manual application, which we did in the past. That significantly reduces our reporting timeline, as well as improving efficiency and accuracy, given the up-to-date nature of those factors. And so as soon as we completed data entry, we could see emissions across scopes and countries. We could easily calculate year-on-year reductions, and so report against our science-based targets at a granular level. So yeah, it was a great help, really, I suppose, with year-end. It made it a lot quicker and I think a lot more accurate than previous years.
It's great to hear. And from where you are now, what additional functionality are you thinking of next or planning to use in the coming months?
So we've got three modules currently, kind of the introductory models, I suppose you might say. The Scope 1 and 2 GHG accounting report you can see there, the Scope 3 one, and the ESG reporting frameworks. And I suppose we've used most to date the Scope 1 and 2 in particular. But we're looking in the future to leverage the ESG reporting framework module, for example, to complete our CDP submission over the summer, which I'm looking forward to being quicker than in the past. We also intend to align our reporting to the ISSB S1 and S2 standards. And so access to these within the system will really facilitate the initial gap analysis that we're planning to do in the autumn. And we'll also use it for CSRD alignment when that kind of comes back into focus. And so far, we've found that the structured approach that Envisi has to these frameworks really accelerates our reporting and disclosure efforts and simplifies it. Separately, we want to use our Scope 3 accounting and reporting module more as well, particularly this year to support calculations within our major categories of Scope 3. We know that to effectively reduce emissions within our broader value chain, we need to focus on Scope 3, and there's a critical need actually for us to enhance our calculation methods, incorporate more specific data and the Scope 3 module we believe will provide us with the necessary emission factors, robust capabilities to achieve this, making it an important tool for our longer term decarbonisation strategy.
I think it's a great point that adding more functionality can be more of the modules you're already using, and that there can be that other functionality within those modules. I know that recently in Envisi we've added support for recording the results of materiality assessments. You mentioned that with the ISSB, with CSRD as well. So hopefully that will be particular functionality that can help you soon.
I think we're still learning about, the modules we have, what functionality they have, and diving deep into those, using them more is definitely a benefit.
Good. Yes. Well, I am if you have questions on those. Excellent. Thank you, Nick. And Ross, as an Envisi specialist, asking a similar question, which modules do you see as becoming helpful to Logicalis?
Yeah, it's a really good question, and I think I really like hearing about what Nick's talking around Scope 3 and CSRD and double materiality and the likes as well. That's very much where we're focused in terms of our development. So, for example, for Scope 3, when you're calculating, your purchase goods and services through spend-based emission factors, where a potential avenue of usage that Logicalis and Datatec can go down is in the Scope 3 AI Assist capability, where we actually have a built-in AI assistant that can help clients categorize those Scope 3 emissions based on what we're reading from a spend transaction perspective. And so that can be a real time saver when you're trying to assign spend factors to maybe hundreds, if not thousands, of individual spend transactions as well. Another piece where we're seeing clients maybe in year 2 of their development cycle with Envisi is a module called Planning Analytics, and that's really around not only just capturing targets like science-based targets or net zero targets within the platform, but also modeling your performance across future years as how you're going to meet those targets. So it could be taking an organization-wide target, cascading that down to individual sites or suppliers, and trying to essentially project outwards using again AI functionality that can help with the advanced calculations of our own projections of targets to see where we're going to be in 2020 at the end of 2025, where we're going to be in 2030, how are we going to get there as well in terms of the various milestones from a data perspective that we need to achieve as well. So it really brings up a visual, numerical, evidence scientific approach of how you're going to meet targets in the journey on your way there as well. And I think that would really apply well to Logicalis in terms of what they're aiming to do with their targets.
Great, yeah, and there's that balance of like the long-term thinking and then that science-based database that we've mentioning, and Nick mentioned the SBTI, so
exactly
exciting. And with other clients, what do clients often measure themselves against? Could you give an example of how clients consider maybe their competitiveness or ESG position?
Yeah, absolutely. So the brilliant thing about sustainability is that it's contextual. It can mean different things to different clients depending on what they're aiming to achieve within their industries and within their own companies as well. Where you might see typical KPIs in terms of how they're measuring themselves would be things like revenue per CO2 emissions produced, or waste generation, or water consumption. These are more standard KPI metrics that I'd say I see across most of our clients. When it comes to more client-specific examples, yeah, there's a whole range of really interesting examples. So, for example, for our manufacturing clients who are producing, services or goods, they will often measure themselves based on, production units produced per CO2 emitted. So they're actually analysing their CO2 footprint through the lens of, the things that they're building for their clients. Another really interesting one is I have a natural gas transmissions client. So they transmit natural gas, they're a natural gas transmission operator, and they want to understand how efficient the actual transmission of the natural gas is. So they measure the volume of natural gas that they transmit per CO2 footprint again there as well. And then finally, a really interesting example with one of our other clients is a data center client, and they essentially, they host services and technologies on their data centers for their clients. And so they actually report back to their clients, this is how much IT load we're providing you, and this is the associated CO2 per IT load that is attributed to the services we're providing as well. And so that's actually a key differentiator for them in terms of reporting upwards to their clients and also to their investors, who are really keen on understanding, how are they bringing that extra piece of competitive edge to their industry as well. So yeah, it's a really interesting point around KPIs across different industries.
Yeah, and how unique they can be. And I like that you mentioned that it can be done by industry or even just one business has their own approach to it. Yeah, very interesting. Again, I think that plays back to the science-based targets part, right? That this, where is the core value and where are the things that these businesses can influence? So a slightly different question then, looking more at the projects that you work in and making clients successful with Invisi. Can you tell me, what does client involvement look like across that project implementation lifespan?
Yeah, absolutely. And it's a question that always comes up when we engage with clients at first, is they want to understand, how much time and effort setting up a platform like Invisi takes. And so to support with that, we've been using, an 8-stage implementation methodology that has stayed the same for the last 10 years. And so it's a pretty tried and tested methodology, as you can imagine, as a result of that. And that really comes from the benefit of, being in this space for as long as we have been. And in terms of client engagement, it of course varies across the lifespan of a project implementation. And some, there's some parts of the project where they're really going to be involved, and there's some parts of the projects where, not as much involvement is necessary. Parts of the project that you might see more involvement is really, and Nick and Logicalis and the Datatec team will know this from experience themselves, is really at the beginning phases where we're firstly going through things like a requirements gathering workshop. We're identifying, why does the client want Invisi? What are the reporting standards that they're looking to report against, like ISSB and CSRD? What are the metrics that they're looking to measure themselves that we touched upon earlier? And a variety of other things, such as the structures that they want to report against as well. And that will typically require a lot of client involvement, because we really want to make sure that the thing that we're building for clients, the platform that we're configuring, is going to align exactly with what they expect from the platform and why they bought the platform in the first place as well. So the more client involvement there, typically the better the outcome for the client, is what I typically find in implementations. And then once we've gathered those requirements, clients can then, maybe take a little bit of a breath and step back a little bit, because then we configure the platform against those requirements. And that's where IBM and Invisi and Logicalis supporting really step in to, develop and configure the platform as required based on the requirements as well. And so, yeah, it varies through the project, but I think what's key for the project is consistent and continued communication, so that expectations can be managed and communicated, and the right stakeholders can be brought in for the right parts of the project as well for the client organization. So no one's sitting on a call when they don't need to be sitting on a call, essentially. So yeah, does that make sense?
Yeah, definitely. And I think it comes to an interesting question around stakeholders. I mean, this week we've got London Climate Action Week. There's so many events, and the ones I've been able to attend, it's nice that not everyone I talk to necessarily has sustainability in their job title. And I think, much to your point around KPIs, they're so different per industry. I think it can be the same with the structure of sustainability and the people that are working on it. So out of the users that you see and those teams that are involved in the project, do most users or all users have sustainability in their job title? Tell me about that.
No, I would definitely say most users probably don't have sustainability in their job title. What we tend to see with Invisi is that clients who are really, embracing the platform and the implementation of the platform are really looking to engage as many stakeholders across their business as possible. It's all well and good, buying a piece of software and implementing that piece of software, but what also typically comes with that, and what is key to that, is the involvement of people and the stakeholders around the business. And so really embracing that new cultural change when you're onboarding a system like Invisi is really important. So when it comes to stakeholders that we might talk and discuss and collaborate with during an implementation across the entire businesses, that will most often be the largest variety of people for clients who are really looking to make Invisi a core use or core system within their business infrastructure, as it were. So that can include people like project managers who are there to make sure the project delivery is done properly into the requirements. It can include site managers, where we're looking to engage with individual site managers across the business who wish to capture Invisi and then capture carbon data, for example, and then use Invisi to report on that carbon data. It can be procurement managers, similarly for the supply chain and the management of supply chain based emissions. Another one is HR directors as well, where we're seeing more corporate social responsibility reporting coming into play with Invisi as well. And of course, you then have your executives who are mostly really interested in how the company is performing on a year-on-year basis. And then the main reason they're interested is because their investors in the companies are also really interested in using the platform and gaining insights from the reports that the platform produces. So we have one client, for example, who actually provides direct access to Invisi for their investors, so their investors can just step into the platform and look at how the company is performing from a sustainability perspective as well. So yeah, lots of people are typically interested in a sustainability platform that might not necessarily have sustainability in their title.
Great. And to me, I see that as progress, right? That it's not just one person's mission, and that the platform can help to engage other teams. And Nick mentioned that earlier, right, around speed to get data to people and having that single platform to do that. So yeah, didn't know about that example with investors. That's very interesting. It's good to hear that it can be used that way and that can help. And I think another part of that is with all those different teams that in some cases that actually might align to individual different modules. One that I don't think we've mentioned yet is around climate risk, this sort of growing area. And some industries have looked at climate risk for a very long time. For example, insurance, transport, tourism, industries that are so dependent on climate. And I think percentage-wise, it's more than 50% of global money, as far as I understand, is linked to climate. So it's not that it's just those industries, but this idea of having a role and a function that looks at that, and it might be an individual title, but it's something that I'm seeing as changing different stakeholders and new stakeholders that are starting to look at this. Thank you, Ross. And actually, Nick, from that, I'd like to come back to you for a question. Again, Ross has just described these different teams that can align to different modules. Can you tell me about which modules you're considering adding to your use of Invisi in the future?
Yeah, so climate risk actually is one of them, particularly how it can support our work on transition risks. We did a scenario analysis last year on a qualitative basis, and then recently, actually outside of the tool, we've completed some financial quantification of key physical risks, but our focus next will be shifting to transition risks. And so we're looking to find out really how that climate risk module could support that work to interrogate, map out in more detail, those identified transition risks. So that's one we're looking at. Another one, given our forthcoming focus on scope 3, we're looking at the supply chain intelligence module as well, which, as I understand it, focuses on purchase goods and services category, which actually makes up a significant majority of our overall total emissions. We think this could really help us tackle that category through better engagement with our extensive vendor and supplier network, as well as with calculations and eventual mapping of emissions reductions in that category. So yeah, I'll be coming back to you soon for more information.
Great, no, really good. And I think it aligns well to what Ross was mentioning around these areas of focus and there's different stakeholders too. I'm sure we'll discuss that soon. So we've looked at then sort of Logicalis' use of the platform, the direction that's going in, and also from Invisi side, these areas of interest and who uses it and how. So Tim, I'd like to come on to ask you some questions about what you see. And the first being, in line with what we've just looked at through that module slide, which modules do you see most activity and interest around at the moment?
So I generally deal with people who are new customers in this space, and they're naturally wanting to get the basics right. So exactly the same as Datatec, scope 1 and 2, scope 3, and the reporting modules, and getting those bedded in and right, and knowing that they can build from those eventually as and when they need to.
Yes, yeah, we see that generally, and as you say, it's not specific to one industry, I don't think, right? This baseline start point is common across many. Excellent. And beyond Invisi, in that sustainability space and this sort of maybe risk advisory, the other things we can call it, what are customers talking about? What do you see?
Well, they pretty much all have a sustainability objective or target in mind. I say pretty much all. I've come across the odd one that really haven't got there yet, but they are probably lone cases. And they're all have internal pressures to achieve sustainability, from regulatory and reporting right through to being a good citizen and bringing their employees with them. Universities in particular all have sustainability objectives, and they're addressing their target customer base, which is the young people who think about this far more than many of the other groups in society. What I am finding, though, is there are two models. There's the top-down model, and Nick described that with Datatec, where we took a strategic decision at chief executive level to drive out sustainability as a key thing across the business. And he's flowed that down with objectives for all of the CEOs right through the business. And there's the bottom up. And the bottom up is more interesting. It's often driven by market pressures. And that approach, let's take, for example, the NHS. The NHS is now increasingly mandating that all of their suppliers have to have carbon reduction plans. And that's driving people to measure it, because if you haven't measured it, you can't reduce it and then report on it. And that's then getting people to look at something simpler to do than just looking at the electric bill. That's looking at the whole, bringing everything together in one tool to show that spending money on one product is saving money on other products, but at the same time is reducing the carbon footprint. Yeah, so we're seeing that across the piece. And there's a foible in there as well, which is that the new Public Sector Procurement Act, post-Brexit, where we got away from the European Journal process, we now have our own process within the UK, has actually mandated that every procurement above 5 million has to have a public good component to the scoring. And we're seeing that flow through in terms of wanting sustainability improvements. And it goes as far as actually asking for there to be a number of KPIs to be measured in each procurement. And if those start to be sustainability driven, we'll see the need to measure it and report it being driven up by this change in procurement.
Excellent. And just out of those industries you mentioned, in particular universities and public sector and NHS, are there particular industries that you work more with, or where do you think those talking points are, again, more specific to those industries and businesses?
The reasons for driving them are specific. The universities, it's their customer base. Young people are very much more conscious about our sustainability and how we use our planet than people who've been used to consuming it, like myself. So there is that. But across all of our segments, finance customers, NHS, we see it. Everyone's got a sustainability target.
And to that point, perhaps, how are regulation and compliance driving that approach in the UK?
Yeah, it's interesting. So CSRD, Nick mentioned it earlier, is front of mind for people who've got operations in Europe, and for most companies, that's been watered down because they've delayed the implementation of it. They've taken the smaller companies out of scope. So we are seeing some slowdown in that. But within the UK, there's the streamlined energy and carbon reporting policy, and that covers the larger companies, so 30 million upwards of turnover, and that's requiring some reporting. So there's a need to get that consistent and to make it easy to do. And the other one that actually interestingly ties into Ross's comments about investors is the Sustainability Disclosure Requirements, SDR, in the UK, which applies to FCA registered companies, i.e. the investors. And it's aimed at making sure that the claims in their investment portfolios are accurate and science-based. So driving out the so-called greenwashing of investments. And where you see that companies, investment companies, have funds that are based on sustainable businesses, it's actually helping drive those out and make sure that the claims in those funds are accurate and science-based. So that's important in terms of reporting as well.
Absolutely. And I know today we're not just talking about the UK, we're talking about Ireland as well. So what's the comparison there around regulation and compliance? How does that drive the approach in Ireland?
Yeah, so clearly CSRD directly applies in Ireland rather than indirectly. And for the 1,000 or so companies in scope in Ireland, it's front of mind. So that's absolutely key. I did say the obligations are reduced, and the smaller companies that were looking at it have come out of scope, and there's a stop the clock element that's delaying some of the implementation. The EU are also looking at tackling greenwashing, and they have their own Green Claims Directive, which is again something that's looked at taking the greenwashing out, and that needs again science-based targets to prove that what you're doing is correct. So yeah, it's aligned but different.
Interesting. I hadn't realised it was as many as 1,000 Irish businesses obligated by CSRD. And the final couple of questions on that then. So what future changes do you expect in terms of those client drivers? And you've mentioned different pressures, right? The regulation and then also the industry pressure that's sometimes more specific. So what changes do you expect in that landscape?
So I think the most interesting one will be the UK's aim to influence the whole agenda through the finance chain. And they are starting to signal the use of an IFRS, so that's a finance reporting standard, with the SDS. And during 2025, the UK government's running a review, an expert panel to look at introducing that into the UK finance markets, to use future regulation in finance and future reporting in finance to influence the whole of the economic market in the UK. And I think that's probably the most important change we'll see. The other one is measuring carbon coming in and out of the country, the carbon borders, let me get this right, the carbon border adjustment mechanism. It will apply to producers of things like chemicals, petrochemicals, cement, to measure and account for the carbon that's crossing our borders, so that we're getting a better view within the country of the actual carbon content of the things we use. Both of those are things coming up this year.
And would you say then that they are the focus of 2025, or would you say something else? Some of these regulations, of course, will come in a little bit later.
I mean, they are where the focus will be in terms of thinking for 2025 as people are preparing for future regulation. Yeah.
Excellent. Thank you. Thank you, Tim. Okay, well, thank you also. I've seen that some questions have been submitted as we've spoken. Please do continue to use the comments box to add more questions, and it's now your chance to join our discussion where I can voice those questions to our three panelists. Before I open to those submitted questions, I'm interested in that same question around what future change you expect, but also what's the focus in 2025, to Nick and to Ross. So Nick, I know you mentioned CDP and writing a report for that over summer, but Is that the main thing, or what would be one thing you see, or additional thing you see as a focus for 2025?
That will be a focus, but thankfully won't be our only focus. Quite a long submission, that one. I think for us, Tim mentioned earlier the kind of the top-down approach, which Logicalis and Datatec took originally. We're kind of shifting that to be more country-specific now, and Envisi has really facilitated that. And so a big focus for us this year is putting carbon reduction plans in place for specific territories. So we had plans in the past, but overarching plans, and now we're going into the detail and we're saying, which are the biggest emission factors by each country, even by each locality, and starting to really dig into that and understand what changes we need to make to hit our SBTI 2030 target, which is a 50% reduction in Scope 1 and 2. And that will involve quite a lot of work, quite a lot of use of the outputs, the reporting, and then obviously coordinating with each country to understand and plan out, where can we make a change, whether that's in the data centers we have, whether it's in offices or elsewhere. So that will be a real focus for us for the rest of this year, and I'm looking forward to that, kind of turning planning into action, hopefully.
Yeah, it sounds very action-driven and fantastic. Great, thank you. And Ross, from a product focus, from the Envisi focus, what would you say is one highlight of Envisi's roadmap for this year?
Yeah, I mean, where do I begin? There's a lot to focus on. I think what you said, Georgina, actually earlier, what you made reference to, the inclusion of the double materiality assessment and capturing of the details of a double materiality assessment is really key, especially with CSRD now. We have clients using the platform who are now reporting to CSRD this year, and I think from a roadmap perspective, the inclusion of double materiality and the linkage through from the double materiality topics all the way through to the individual CSRD subtopics and topics and clients' responses against those topics really helped strengthen the positioning of when they put out their CSRD disclosure. So I think that's really interesting. I think we've already spoken to it already around the climate risk. I think that's a really, really interesting additional functionality that's coming out this year as well. Like you say, it's quite a new topic area for some industries. It's a very much traditional topic area for industries like finance and insurance. They're very, very familiar with climate risk and transitional and physical climate risk. But for other industries, in the example, for example, I've spoken to manufacturers who have manufacturing sites that they want to understand the physical climate risk associated with those sites. And because that obviously has a financial implication as well in terms of their core business model, I think the availability of clients being able to really visualize climate risk based on the locations, based on the environmental, attributes that locations are situated within, I think is going to be really key moving forward when it comes to reporting against, TNFD and TCFD and the likes, where climate risk matters.
And again, Nick mentioned it, but that specific territory plan and then being able to do that at that physical asset level for climate risk is very aligned to that. Again, thinking local, thinking specific models, specific risks.
Exactly.
Fantastic. Okay, thank you all. Really good discussion. I'll summarize it towards the end, but for now, we open the stage, or not the stage, but we at least open the Q&A to our valued audience that are live on LinkedIn. So we have, amongst our speakers, we have a client user, we have the IBM product view, and we have the market view. So it's a great opportunity for a question that could be relevant to all three of our speakers or just one. If it's just relevant to one, please tell me who you'd like me to ask the question to. But continue to put in those questions, and I'm going to get through as many as I can. So the first question, we have it on the screen. Where can I expect efficiency gains if I move away from Excel-based reporting? Maybe, Nick, you mentioned that transition, how much Envisi's helped with time and process. Can you talk us through that question, please?
Absolutely. I mean, I think the main saving is in time. It has made that process of data collection, analysis and reporting so much quicker and more efficient. And that affects a lot of people across our operation. We're in a number of countries around the world. Each of them have to help us by inputting data. And by using the system, it saves them time. It also saves centrally us time, identifying gaps, following up on those, on the analysis. Application of emissions factors, I mentioned at the top, that time saving is significant and has made a big difference to us. Elsewhere, there may be savings to made on advisors or consultancy costs that you may have had or we may have had in the past. If you're having to go outside your organisation previously to help with emissions calculations or emissions factors, then that would again be a direct cost saving from using the software.
Yes, and yesterday I went to the flagship event for London Climate Action Week, which is Reset Connect. It's running today as well in the Excel Centre in London. And there were a lot of technologies there. I think that there has been this general shift that most businesses now are looking at technology. Now, there are ways to do that sort of piece by piece, right? I mean, again, Invisi has this approach with lots of modules. There are different products out there for each of those modules, effectively, to look at these specific functionalities. And I think to our discussion generally today, we're talking about different users, different user teams, right? There's a technology that could help any one of those people. But trying to centralize that and seeing that time benefit, I still hear from many businesses that Excel is the main competitor of these kinds of platforms. So yeah, certainly focusing on efficiency gains. And as you say, Nick, the sort of business case is a really good point. Okay, let's go into our next question, please. On business case, how fitting. So how can I build a business case for ESG reporting software? Maybe Nick, if you want to start on that one as well, it seems building on what you've just started.
Yeah, sure. So I think obviously efficiency gains we've just touched on. I think one of the other key things, particularly around reporting, is bringing confidence to the C-suite, right? They may not be experts in this area, and so having more accurate emissions calculations, having a tool to help with that, as well as the compliance with ever-evolving ESG regulations and frameworks. That bringing that confidence is pretty important. It can also help with any assurance requirements. They were due to be in CSRD, probably still will be when that comes around for the UK, and it would make it makes any audit a lot simpler if you have a tool, as well as giving any assurance provider confidence in the outputs of the platform. So I think giving that confidence to and assurance to different parties, different stakeholders, is pretty important.
Yeah, and it plays back to what Russell said earlier about who accesses the platform, right? You can have auditors access the platform. You can have investors access the platform. It's up to our client who gets access and what level. But there's that ability to share with different stakeholders, and how I really like that as a focus on confidence. I think that's very good, because often I hear it as a focus on risk, but risk means you need confidence, right? So it's great. It's a much more positive spin on the same, which I really like. Thank you. And Tim, would you say that that's different in Ireland? How would you build a business case for ESG reporting software in Ireland?
So I think the basic requirements are the same, but the drivers are looking at the different reporting frameworks. And one of the great values is that Invisi, once it's enabled, allows you to report into whichever framework's required. So CSRD for companies in Ireland, but if they've got subsidiaries in the UK and elsewhere, or they're working with other bits of their organisation, being able to report in those geographies with the right framework reporting, and using things like the correct carbon factors to calculate the carbon content of the energy they're using, so it's correct for each geography, is key. And the fact that IBM maintains all of that in a database behind the scenes actually takes away a whole stack of work from someone looking them all up and making sure they're correct at the time of publication. So it certainly removes some of the friction from this reporting across different geographies and different reporting standards.
Yes, and as you said earlier, Tim, I think that regulation is generally still at front of mind, and maybe back to Nick's use of the word confidence, right? If it's going to be confidence to do with regulation and compliance often, but there can be confidence more broadly than that, and there can be return on investment or business case beyond the regulation. So I think we're seeing, just as you say, Tim, we're seeing a different emphasis as part of which drivers might be the biggest. I would say that before CSRD came in, we had different business drivers, maybe voluntary reporting more than regulatory reporting, for example. And again, in some markets, we're coming back to that. But there's still businesses wanting to differentiate and really stand out within their industry on this. Yeah. One of the questions I'd like to ask next, let's go to our next question, please. Perfect. How do you collect data from your various geographic regions? I'm thinking, Nick, this is a question for you. Aside from Invisi Core, which modules are implemented across Logicalis? So that one we sort of covered, but if you could, Nick, talk about how you collect data across different geographies.
So we do have representatives essentially in each country who help us as a central team by inputting the data, getting hold of the utility bills, anything to do with Scope 1 emissions, vehicles, and we ask them to input the data into Invisi. They can also attach the document itself, so we have an audit trail, if you like, confirmation of the figures. And I think something we'd be looking to do in the future is to consider how we could automate that further, and might be something that Ross could touch on about how we can shift away from such a manual data entry to linking those directly to utility bills, for example. And that's something we're looking to explore as we go forward. In terms of the modules, we touched on earlier, we've got the Scope 1 and 2, as well as Scope 3 accounting reporting, as well as the reporting frameworks modules. And obviously, without any of the data input, we wouldn't be able to apply any of those.
Great. Ross, would you like to add anything to that?
Yeah, absolutely. Yeah, I think it's a really good ambition to try and automate as much data capture as possible. From an Invisi perspective, wherever there are opportunities to automate data capture, we definitely, push for that in terms of quality of life improvement just for clients. When you're solely using manual data capture methods, it can be quite arduous and quite time consuming, and it's maybe a bit more prone to human error. So yeah, absolutely, when it comes to automation of data, that's something we support in all cases if it's possible. For example, and I'm just going to put a little plug here for our user group that we were hosting on the 29th of September. From our last user group which we held in November last year, which is where all of the current clients for Invisi come together, as well as maybe some prospects who are looking at the platform. We had clients there who had no automation, and we had clients there who had a large degree of automation, and the clients who had no automation could talk to the clients who had larger degrees of automation as well. So for example, one of our clients is a very large healthcare provider in the UK and Ireland, and they have around 9 different utility providers, and they have an automated connector feeding data in from that utility provider automatically into the Invisi platform. So all of those utility metrics that you're calculating for your Scope 1 and Scope 2 are automatically being captured, and then, as Nick and Tim have alluded to as well and described, Invisi is then automatically assigning the correct emission factors for those utilities based on the location and the timestamp and the data type, if it's natural gas and electricity. And we're managing all of that for our clients in an automated fashion. So even when those emission factors are updated, we update them on behalf of our clients as well. So it really is quite a significant cost saver and time saver when it comes to automation.
Yes, fantastic. Great. Well, I think that I haven't seen other questions come in the last couple of minutes, so I might bring it to a close there. If you do have questions that haven't been answered or that you think of over lunchtime after today's webinar, then you can contact any of us on LinkedIn. Otherwise, I think there'll be ways to send an email or to look at the recording and follow up and see it that way. So there are lots of ways to get in touch with us. Please don't hesitate. There have been lots of different areas of discussion today that we could have gone and dug much deeper into. So if you do want to do that, please do talk to those of us you'd like to explore that with. I'm going to give a little bit of a summary, and I will bring this session today to a close. So first of all, thank you so much for joining us. Thank you, Nick. Thank you, Tim. Thank you, Ross, for sharing your thoughts. I think it's a really good range of, again, the way that technology is going, the way that Logicalis and parent company Datatec are using the platform, and also from Tim, what we're seeing and what those key drivers are. Hopefully, you've learned something from each of those sections, and again, that it might help you to understand where Invisi might fit in what you're doing and in your approach to ESG and improving that in the business you work with. I'm going to mention a couple of the highlights that I've written notes on from today's discussion. So around all of the variety in different industries, again, particularly from Tim's point, on a top-down approach in some industries, the industry-specific reasons. Ross mentioned industry-specific production units and KPIs. So although we do have regulations that can be quite uniform across different industries, we can also have a lot of specificity in how to stand out and how to be competitive and how to use a platform to show different users and show different outputs and visuals. So to conclude with Nick's point, that the platform Invisi has been around for a long time. Ross mentioned about that really proven implementation strategy, working with a client to make the product successful so that we can give confidence to a C-suite on the data, whether that is, again, for a regulation, whether that is for a unique KPI for one industry to stand out and be competitive. Hopefully today has shown you examples of how this can be done through IBM Invisi technology. Please look out for the session recording. Logicalis will email this to everyone who registered for today's event. And I've got a question to ask to you in our audience to end with. How can your ESG data inspire another colleague to act? We've spoken quite a lot today about users and stakeholders and who matters for these platforms. So please, if you have a view on that, please do write to me with your thoughts on it. If you would like to speak to us further about any of today's discussion, contact any of us. And with that, again, thank you for your time, and I hope you have a good rest of your day.